Hello from San Diego. This is Peter Quinn with Kidder Mathews, commercial real estate brokerage. I have with me today RJ Smith. We're both going to give you a little bit of background on ourselves, and I'd like to start with RJ. RJ, tell us about what got you here.
Sure. Thanks, Peter. So after nearly 20 years of being in the healthcare industry where I was able to help people live healthier lives, I made the transition from healthcare to wealth care so I could help people not only live healthier lives, but help them live their best life. Really fits in with my personal mission of helping others, making a positive impact in the community. And I saw an opportunity to really improve the financial literacy of people out there and help everyone understand what choices they can make to protect themselves, protect their financial future, protect their families, and make sure that they're planning towards their financial independence.
Fantastic. Great explanation there. And I've been in the real estate business now for over 40 years, started in brokerage and progressed into development and investment. And really, I'm following a very similar path that you are, RJ. I mean, my job is always to make my clients, be they individuals, family offices, or corporations, create more value in their real estate. And our group is now embarked on a new mission of also educating families and individuals on the opportunities that exist for them to transfer wealth, to maximize the value of their real estate through entitlement and or sales and or partnerships. So we've got a lot to talk about today, and I'm really excited that we can do this together. So RJ, let me start off with interest rates. How do the current industry trends in interest rates affect your ability to design and provide solutions for your customers?
Sure, Peter. I mean, interest rates are certainly pretty sky high right now when it comes to people's ability to purchase homes or purchase real estate. And so that now impacts their ability with their overall cash flow of understanding what they're going to be able to utilize for different areas. But there's still necessary elements that you need to focus in on, such as protecting yourself, protecting your family. And so it really becomes now a very important part for them to explore their entire expenses, their entire budget, their entire cash flow to make sure that they're allocating their finances accordingly.
That's good. I
Yeah.
mean, that's a great wrap on that. And for commercial real estate and really real estate in general, while I don't really dip into the residential marketplace, it's obviously affecting people's ability to buy new homes. Those with low interest rates are struggling to figure out why they should sell their home and try to move up and take on a higher interest rate mortgage. But in the commercial marketplaces where I spend the predominant of my day, it's also affecting the ability for owners of real estate to add the value through development. Construction loans and the cost of debt and equity are sky high today, making it very difficult to maneuver.
Yeah, that's great. I mean, the challenge of this sky high ability to or sky high rates for people then to be able to leverage, their cash flows and different approaches has really been challenged right now. You can see people making different decisions based upon that, and they're looking where they can store their money or where they can try and grow their money, and so they're looking all the different appropriate or different vehicles and different options.
Yeah, we'll talk a little bit later about where we think the market's going there. So talk about how the fluctuations in financial marketplaces are influencing uh, the decisions on people are making on their life insurance program.
Sure. When you see all the fluctuations in the market, people tend to look for a safety net. They want to have risk management and risk mitigation. So, are they looking for different areas where they can protect a portion of their assets through vehicles such as life insurance, for example, that actually have the ability to guarantee not to lose even if the market declines? So, therefore, if they can protect a portion of their retirement accounts or protect a portion of their assets, well, then they may be able to be aggressive in other areas. And so we're really focused on looking at that investment performance. And, they may end up adjusting or reallocating certain things because of the investment rates. But, the most important thing is they are looking for that safety net and protecting some of their assets.
So how early, RJ, should individuals or couples start their investment journey?
Well, there's a Chinese proverb that says the best time to plant a tree is 20 years ago. The second best time to plant a tree is today. So really, the goal here is to start as early as you possibly can. And that even that just means savings $25 a month, whatever you can, just get into a habit and start as early as possible. The more, it's going to start creating a habit. And the more you can focus in on that, then you can look to diversify and like, find different areas. But the really important part is starting now. And especially if you're talking about individuals that they're married or they own a home or they have children, they absolutely need to be looking on how they protect themselves should any of the bad things happen out there.
In the commercial real estate world, fluctuations in the financial marketplaces have an obvious effect. They slow down the development cycles. But what I'm finding really interesting today is that it's a combination of things that are affecting, say, retail. It's not just the fact that it costs a lot of money to build new retail. I think we have plenty in most marketplaces already. It's that the changing consumer buying habits are affecting the traffic in many malls across the United States. And there are somewhere around 13 to 1400 major malls in the United States. And people much smarter than me, the experts in that retail business, are saying there's maybe 300 viable regional malls in the United States. That's going to be a lot of real estate that's going to take on a different flavor and tenant in the coming years. So you and I've talked about this general generational wealth transfer concept, and we are in the middle of that happening right now. Trillions of dollars in equity is tied up in baby boomers' retirement accounts, in the real estate, in the equities that they control. Where do you see an opportunity to add value to that conversation?
Yeah, there's a couple of reasons. I mean, the first thing is you mentioned the baby boomers. I mean, there are over 10,000 baby boomers that are turning 65 every single day. And the vast majority of them have actually never spoken to a financial professional. They either handed it themselves, they acquiesced to a company retirement plan or even a pension, or hoping for Social Security. A lot of those things you can't count on anymore. And so it's really important to start understanding how does that generational wealth transfer going from these baby boomers down to the next generation. And there are several areas that will really be impacted by the wealth transfer and how you can leverage things like life insurance to improve and ease that transfer.
That's a half-hour discussion in and of itself, because I mean those concepts are a mystery to most investors, to most families out of the marketplace. I mean, they think they get the call from the life insurance guy. It's like, please free me from this. But it's an incredibly valuable tool. And I think we should spend some more time in a future conversation that we can
Yeah.
share with folks that might be watching.
You're right, Peter. That is absolutely something that can go deep on that. There's one point just to remember, especially when it comes to estate planning. Life insurance, any sort of death benefit can be and typically is tax free. So it can help mitigate the impacts of any sort of estate planning taxes. So while we can go through on a much deeper analysis down the road, I think it's one of those things to remember that life insurance can help in a lot of different ways, ease the financial burden if something happens to them. But it also has a lot of implications when it comes to estate planning as well.
Our conversations over the past few months, and my conversations with other people in your business, have led me to start an effort here with my Kidder Mathews team to identify families that control real estate, that an opportunity exists to add value to that real estate. We've been very successful in helping families here in coastal San Diego County make that transition from holder of low rent producing agricultural land to high value residential development sites. So we're working with professionals like you to be a part of that conversation. Understanding, of course, that I'm probably not going to transact something for years with many of these families because they need to plan before they can act. And I think that's certainly what I've gained from getting to know you over the past few months.
Yeah, absolutely. I mean, it really is, as you start to think longer term, there are a ton of tax implications when you start to look at those plans, and whether it's retirement plans or even as you mentioned, when you think about that, Peter, what are some of the key tax considerations that clients should be aware when they're investing in the different real estate options, whether it be commercial or otherwise?
Well, the sellers should be thinking about minimizing the tax implications or effects on the sale of a held asset, particularly a held asset that the baby boomers may have held in the family for a long period of time. It has a very low basis in value, which means that they're going to pay a very high tax, capital gains tax, when they transact on that property. And there are so many really good strategies for minimizing those tax effects. 1031, Delaware statutory trust, being able to uh, take a piece of property or any equity for that matter and set up a charitable remainder trust. There are literally dozens of different ways of doing that, and it requires that one have an open conversation with their advisor to look at what the options are and what is the best one for them. Because if your mom or dad, the remaining holders of a piece of real estate, something I understand, if they were to pass away and leave you that asset, now you get a step up in basis, meaning that you get to take on the current value as your basis. And if you decided to sell, there's going to be very little tax implication. But you may not know that. And there are obligations on the heirs as well. So get with a professional as soon as you can, folks. Hey, managing risk is part of that issue, right? So we're both looking at the risks involved in transacting any pool of asset value from one generation to the next, from say your generation and your kids. Talk about what sorts of tools you're using to reduce risk for your clients.
Peter, first and foremost, life insurance is all about risk management. You need to be focused on making sure that you are covered should anything bad happen. We unfortunately can't control what's going to happen. We're not guaranteed till tomorrow. And so therefore we need to make sure we're planned for the what ifs. I mean, people have home insurance, car insurance, pet insurance, sometimes even insurance on their phone, but they tend to forget their most important asset, which is themselves. So life insurance is truly about mitigating risk, but it's always about thinking, well, what's the need, what's there to be protected, and then coming up with that right approach to make sure there's a balance between the cost benefit analysis of what they're going to get out of it. But it's also great to see people plan for the financial future, and they're going to be prepared for the future, not scared of it.
Super important, plan early and often. So we've got trend lines that we're both following in our businesses. Interest rates have been, had a huge effect on the trend lines in all facets of real estate, from residential to retail, industrial, office. Certainly has been a interesting sector to follow. What are some market trends that are influencing how you're advising your clients?
Sure. I think first and foremost, a big trend in the insurance industry is competition, meaning that there's a lot of different companies out there, offering a lot of different products. And with competition, it means they're going to improve their offerings. So the end consumer is going to benefit. They're going to benefit with better policies, with better terms, with better pricing, with better overall benefits. And if you just look back even 8 to 10 years, the kinds of products and services are available now are almost unrecognizable to what the traditional life insurance and other insurance products are. So that competition really allowed people to take advantage of that and make sure that they're doing something that's going to be beneficial for their personal situation.
Yeah, it's so, interesting that on a macro level, which I like to follow because it sort of creates a clearer picture of where some of the micro uh, uh, fluctuations are occurring in local markets. But we've been reading a lot over the last couple of years about the office building sector with COVID and work at home becoming a driver of office usage or office non-usage. We're seeing older products really suffer in occupancy, and the trend is not good for some of these older buildings. One of my clients, who is a national home builder, has recently embarked on a strategy of buying office buildings, and my reaction to that was, yeah, it's interesting you're doing that, but I've looked at a lot of office buildings and not that many are very suitable for conversion to residential. He goes, oh no, we're not going to convert them. We're going to buy them very inexpensively, and we're going to tear them down and re-entitle for a brand new residential project. And I not a lot of people are talking about that as a trend, but I see that emerging as something that is going to dramatically impact both urban and suburban marketplaces across the country.
That's really interesting. I wouldn't even consider that someone would want to tear something down and then rebuild it. I would think I was right there with you about the conversion side, but sometimes people are visionaries. They see something that's there that not anyone else can see. So,
Well, it is math too. I mean, some of these buildings are so inefficient when the study is done on how do we convert this building. Um, most office buildings have a floor plate or the size of each of the floors in which uh, uh, companies can occupy. They're just too big to provide window line to every single occupant of the size of apartments and or condos that people want to live in today. Most people can't afford a 4,000 square foot condo. They're going to be in something around 1,000 or less. And most office buildings don't really present themselves as suitable to do that. Some do, and we read about them, but they're few and far between. Portfolio diversification is something that developers, investors in the commercial real estate realm spend a lot of time studying. Tell me about how that concept is working to improve the lives of the people you represent.
yes, that's something I counsel all my clients is you need to look at your entire portfolio and look to see how it's going to be working for you. You have a strategy, there's going to be risk tolerance, there's going to be decisions you need to focus on. But if you can, for example, protect some assets by certain classes like life insurance or other areas where it's guaranteed not to lose should the market decline, so you're protecting that set of assets, well, then that allows you to be more aggressive in other areas. You might be able to take more risk in that part of your business because you know that some of it's protected. So having that diversification is really important and really necessary. And there's also aspects of different levels of tax implications that you need to factor in as well.
So uh, I know you have a plan. I think I have a plan. But there are, as you're getting to know your client, from that introduction to that first interview where you're asking all about their wants and desires in the future and what are you holding today, give me two or three questions that you always get from the clients that you're getting to know on how to advise.
Yeah, some of the first type of a question is really around what type of life insurance should I buy? What do I need? And my answer to that is it depends. It depends on a whole host of background information based upon their current situation. So it's hard for me to ever just right out of the gate recommend one particular product because I need to understand if it's going to be valuable to them. As I mentioned earlier, there is some competition aspect of it, of the different products and services that are improving. So some people might hear, hey, I want this or I want that. I want this type of life insurance or this particular. Well, it may not be useful for them given their current situation. So for me, I always talk about just understand their overall needs and then start with a customized plan.
Smart.
Yeah.
Every journey begins with a single step.
Yeah.
You got to take that step, or you're going
Yeah.
to find yourself questioning everything you've done
Yeah.
over the course of your life.
What type of general advice or kind of questions do you receive from your clients?
Well, it's about the process. What can I do as an individual or as a family to protect my assets? And obviously, I'm focused on real estate. Improve the value of my assets. Uh, who should I be considering to hire to advise me on some of those things? Because not every question regarding a real estate holding can or should be answered by me. And I have lots of contacts and confidants in the business that I turn to for some of those particularly difficult questions to explain. Taking a piece of property and entitling it to some other use. It's very complex. It's very expensive, and if you don't know what you're doing, it is incredibly expensive. And so I get that a lot, and it does cause people in many situations to incorporate into their plan a transfer of that asset to another owner who can use their expertise to add the value and structure it so that the heirs get to enjoy the increase in value over time. But that requires patience and it requires trust. And obviously, those are the things that we are spending a lot of our time trying to build with our clients is be patient, trust that we're introducing you to the right people to get this thing done, and you'll have a wonderful result in most cases.
That's great. Yeah. One other question I get from clients oftentimes is, do I really need life insurance? I mean, what if I just put all the money and just put it into invest it in the stock market and then just make sure I have enough money to when I'm ready to to retire or to use it. And I think that's a definitely a strategy that you can pursue. The biggest question is you just don't know when you'll need it. And if you had a crystal ball and you can say, I know that I'm going to be able to live for the next 30 years, and I know that the markets are going to grow X% and that's going to get me my need, well, then that strategy is perfect. But let's be honest, most times we never have a crystal ball. So we don't know when you're going to need protection. We don't never need, to know what's going to happen in the market. So for me, my guidance is always you got to protect yourself for the what ifs. Because what I don't want to see happen is all of a sudden someone needing to have a GoFundMe campaign because their family is in need because they didn't do proper protection, proper planning.
Great advice. There's a lot more that folks out there can learn. Where RJ and I are going to make sure that our contact information is included at the end of this presentation and discussion. RJ, I really enjoyed spending the time with you today. I think I learned a lot, and I hope folks that view all or parts of this take the opportunity to reach out to you and ask for some advice. Peter Quinn, Kidder Mathews, San Diego, here with RJ Smith. Thank you very much.
Thanks, Peter. I appreciate the time.